How's it going, everybody? Mike Weber, your Los Angeles real estate broker, here with your market update for the beginning of March 2023. Things are certainly getting more interesting out in the local real estate market. We started out the year kind of seeing a little bit of a boost in activity as a result of mortgage rates having come down a little bit as people kind of expected the Fed to start to pivot, maybe lower rates. And then, of course, what we saw was hotter inflation data just recently and a renewed commitment by the Federal Reserve to continue raising rates, another 0.25% here, 0.25% there, which has caused mortgage rates to trend back up to around that 7 percentage point sort of range. And it seems like the Fed's going to continue course of trying to or attempting to fight inflation, which should drive mortgage rates even higher, which is certainly going to slow things down as long as that continues to be the case. One thing that kind of has me surprised is we're not really seeing an uptick in inventory coming on the market yet, which we would generally expect to see at this time of year, especially considering home prices are continuing to fall. We would expect to see more sellers kind of start to rush for the exit, try to sell properties maybe that they don't want to deal with anymore if they're tenant occupied, maybe sellers that want to downsize, maybe sellers that want to move out of state. And we're really not seeing that yet. So prices continue to trend down yet again. Inventory remains pretty low, and for pending and closed home sales, they are at levels we really haven't seen going back all the way to 2008, which I'll show you on the graph. So let's go ahead and jump into the data and take a look at what's going on. Obviously, if there's anything I can do for you or anybody you know in terms of real estate in the greater Los Angeles area and beyond, reach out to me. I'm here to help. If you haven't already, click the thumbs up, go ahead and subscribe. Let's go ahead and jump into the data. All right, so getting started in the county of Los Angeles, home prices are down 5.7% compared to where they were a year ago at the same time. They're down to around the same point where they were in early 2001. And we've almost erased the entire gain that we saw from the beginning of COVID, when all of a sudden people wanted to move houses. Maybe they needed more space since they were working from home, etc. Now, when we look at closed sales, we see that we're down 34.6%, but I had to go all the way back as far as my chart would go to 2008 to find a similar level of closed sales taking place. Now, for pending sales in the county of Los Angeles, it's even worse. We're down 54.5% year over year. And this is even way below where we were in 2008, which is the furthest that my charts go back, which just means there's very little actually in escrow currently. Finally, average days on market in the county of Los Angeles are up 63% year over year. We're up to 44 days on the market. So that means homes are sitting on the market for 44 days on average before they accept an offer and have a chance to make it through escrow in another 30 to 45 days, assuming the buyer doesn't back out of the transaction. Moving on to the South Bay beach cities, we're only down 4% year over year, but as I've said before, we're down much more substantially than that from kind of the all-time peak that we hit for a very short while last year. And again, in this case, we're kind of right where we were in terms of price at the beginning of 2021, which means we've now erased 2 years worth of price growth, and we're getting close to knocking out the entire gains that we've seen since the beginning of COVID. Similar story on closed sales in the South Bay. We're down around 27%, only 209 transactions closed for the month of February. Definitely not much activity out there in the market, well below what we would normally see for this time of year. Last but not least, and the same as we're seeing in the county of Los Angeles, pending sales are looking even worse than closed sales. We're down 53% compared to a year ago, only 177 sales currently pending, and well below where we were even back in 2008. So I think if these rates continue to stay elevated, which personally I don't think they will for long, but it is certainly a possibility that they will stay somewhat elevated, or they could even stay as high as they are now, or worse, there's entirely a possibility that they could go even higher for an extended period of time, which will impact the housing market in a very serious way, making buyer affordability substantially decline as a result. That said, home prices are still relatively high. We don't know what's going to happen, which makes this both a good opportunity for sellers that are looking to cash out for one reason or another, or of course buyers that have had difficulties in the past finding good properties, finding the right properties. Now there's a lot of opportunities out there, a lot of opportunities to get a much better deal, to negotiate aggressively to get a great price on something. So guys, I appreciate you watching another video, and we'll see you next time. Take care.